I'm going to be covering two basic perspectives. One would be the perspective where the government has, further eased the ease of doing business. So the ease of doing business perspective of the union budget proposals, and addressing the COVID impact. I think these two are the main perspectives which I'll be covering in the nugget today. Um, First perspective that I'm be taking up is the ease of doing business. Now, regulatory burden on a business has a significant impact on how it performs. Since 2014, the government has been working on creating a conducive environment by streamlining existing regulations and eliminating anything that's unnecessary. In the current budget, there have been certain proposals which have actually further eased the ease of doing business. Well, first, very relevant provision is that taxpayers are now being allowed to file updated returns. So the thing here is, if I have filed a return for a year and say after a year I realize there's something else that I need to declare in my returns, I have that facility to go there and update my return. But the catch here is that I'm sure a lot of people would not be aware of is that this is only allowed if you are increasing your tax liability. So if there is, if you want to show a loss, you want to reduce your tax liability than what you showed earlier, that is not allowed under this provision. So only and only if you are increasing your tax liability are you allowed to actually go ahead and update your return. So, one catch which nobody really points out in the budget. Uh, Other important provisions which I feel for any business are from the GST perspective. So, for a year, say we have certain tax credits, we have made purchases from our vendors, we have taken certain services, and we have received invoices for those services or for those goods. So technically, the law allowed that we could claim tax credits on them up to September of the next financial year. So those time periods have now been extended uh, up till 30th November. Now, in essence, if I actually see it's an increase by 2 months, I get 2 more months to actually claim my tax credits that I missed out on earlier. But this is not 2 months really, because they say that 30th November. So earlier also, the provision said that you could claim your tax credits up to the date you file your return for the month of September. So you file your returns for the month of September in the month of October. So technically the earlier due date was 20th October and now it's been increased to 30th November. So prima facie 2 months increment, but technically we just get 1 more month to claim all this short ITC. Uh, Second is again in a similar manner. If I'm giving certain services, I'm selling certain products, I can issue credit notes against them. If I have to revise prices in those invoices, I can again do that up to the extended time limit of 30th November of the next financial year. So if it's 2021, up to 30th November of 21. Another very important amendment is now if I have multiple branches in different states, so I have one in Delhi, I have one in Haryana, I have different registrations. Earlier, I could not, if I have certain cash that is lying in my Delhi registration, I could not take it to any other state. But now all that has been enabled. So within your branches, you can transfer the cash amount lying in your credit ledger on the portal. Well, the second perspective that I would want to highlight here is the addressing the COVID impact. Now, this was a necessity since COVID has really hit all businesses really hard, as well as individuals for that matter. So, certain COVID impact address the certain budget proposals that really address the COVID impact would be firstly, if you received any money related to any medical treatment expenses for COVID treatment of either yourself or any of your family member, that particular amount will not be taxed as your income for the year. So this is one major relief that the government has given. In fact, this was given earlier, this has been continued. Secondly, if any financial aid is received by a family of a deceased person, so it's exempt fully if it's received from the employer. And if from any other person, they've set a limit up to the amount which it will not be included in your taxable income. Lastly, now something that I think startups here would really rejoice. So the government had fixed a lower corporate tax rate for startups if they started their manufacturing by a certain time period. Now, in view of the COVID and how it has impacted manufacturing and businesses, the same has now been extended to March 2024 for them. Also, the government had given certain tax holidays to startups. To tax holiday means that you don't have to pay taxes for X number of years. It is specified in the law. So now that date to actually apply to be eligible for those exemptions has also been extended, keeping in view the COVID scenario in our country. Well, thank you. I hope, I've covered some few pointers that I could.